everybody, Jeff Gibby. Hope you're doing well. Thanks for coming tonight. Going to be kicking everything off for us. Very special guest tonight. Very special presentation. Thanks for coming to the class. We have a really high number of signups today. So thanks for signing up. It's a class I'm very excited about. I'm glad you came, and let's go ahead and get underway. So I know your favorite part is coming right up here. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So there you go. Got that. The lawyer's now happy. Very special guest today. This is Wendy's first time to do, well, she did our summit about a month ago, I guess, and great presenter. Really like her methodology. I love her backstory. She used to run a gift shop in Biltmore Village, and I guess it flooded, and she had to so she decided to learn how to trade, and that's kind of where her story starts, and she's been trading ever since. So really cool. Her method I absolutely love, so I hope you pay attention today, kind of take some notes. It's a really good method. So Wendy, what do you want to tell us about you?
Well, I'm here and excited to be presenting to your group. That I'm excited to share my backstory, but also some information that traders can use right away. And then we'll discuss a program through MetaStock that I'm also very excited about. Let me get my presentation up here and get the full screen so that you can see.
It's coming through, just so you know.
All right, perfect.
All right, and then this is the point where I get out of the way. Go ahead.
All right, well, thanks, Jeff, for the introduction. For those of you who don't know me, I'm Wendy Kirkland. I've been trading now for about 11 years. I run several advisories, and I've written a number of books. And I guess you might say that my special little niche is the fact that I consider myself to be an everyday trader, like most of you probably out there, that we all come to trading by different means. Some, it might be a family member was involved in trading, or it might be our education or our vocation has brought us to it. For me, it was financial need, and it was, as Jeff mentioned, that my husband and I had a gift shop, and in 2004 it was flooded twice within a 2-week period. They called it a 100-year flood, and so we were good for 200 years. It wiped out everything. Our merchandise, the building had to be repaired, our books, our cash registers, just everything. And it was what Jack and I had put our total 25 years of work equity in. We raised our 3 kids and sent them off to school, and some of them were married, and we put all of that first before ourselves and our retirement, and all of a sudden we had nothing. We truly were weeks before when we could have lost our house, that we didn't have any retirement to draw on, and a friend took me out and told me about option trading. I took a quick 5-week class where we met once a week, and I learned just enough to really kind of get myself into trouble. And from there, then I knew option trading was going to be the fix for me, and it was going to help us out of our situation. And so I really started to study. Anytime I ran into a roadblock, maybe it was I didn't understand volatility or the Greeks or something, I would get a book and study till I understood it. And finally, I got to a point where I was winning more than I was having a losing trade, and I was so happy doing it and so thankful, and it did work us out of our situation, that then I decided I could help other people. And I started writing books. And my little niche, I always say it's like I write my books as if we're talking across the kitchen table to each other, and I'm explaining it to you, that I have cut away all the fluff, the things that just seem to make it feel complicated like a textbook, and I whittle it down to the nugget that is important. And you can read more about me at wendykirkland.net. But let's get on with this, and let me explain what you can use now. That I have discovered that there are kind of 4 important points that work well for me. And these can be used whether you are buying stocks outright, whether you're trading options or futures or Forex. These principles are one, that you want to zero in on equities that are going to have consistent big moves. And the logic behind that is you can, it's evident. You just want stocks that are going to move in your direction on a consistent basis, and then you are profitable quickly. And also, the second point then is to zero in on equities that are either overbought or oversold. And the principle behind that is the fact that if you're getting something that is overbought, then you know that it's going to drop back to some support level that it has been in the past. And in the reverse, if it's oversold, it's going to climb back up to those past levels. So you're going after stocks that have room to move. And then you find equities that have formed a top or a bottom, they have reversed, and they've started a new trend. So that you don't want to hold out with the whipsaws while an equity is forming that top or bottom. You want to see that it has reversed and is getting ready to move in the direction that your trade is. And then you enter the trades at a confirmed entry signal. And for people that are not familiar with options, I'm not going to go very deeply into it, but let's just discuss the 2 types, because that's what we're going to talk about as we move further into this. That there are call options and there are put options. Calls you buy when you expect the price of a stock or an equity to go up. Call options give you, the buyer, the right to require the grantor to sell the equity to you at an agreed upon price at an agreed upon time, no matter how high the price is when you decide to sell your option. They must sell it to you at the agreed upon price, and in turn you sell it for the higher price and keep the difference. This buy and sell happens behind the scenes for you when you close the trade. So you're not actually having to go out and find the buyer. It happens for you. Okay, put options are what you would buy when you expect the price of an equity to go down. This gives you, the buyer, the right to require the grantor to buy the equity from you at the agreed upon price at the agreed upon time, no matter how low the price is when you decide to sell your option. They must buy it from you at that agreed upon price, and you in turn buy it at the lower price and keep the difference. And this buy and sell action happens behind the scenes when you close the trade. So if we're going to look real quick at an example of option pricing. If you purchased options on Boeing, the aerospace company, and its stock is priced at $150 per share, and you're interested in contracts then for the 150 strike because you feel the price is getting ready to go up, and you pay $3 per share for the 100 share call contract that expires in 2 months for $300 per contract. And we'll say that we are going to purchase 600 I'm sorry, 2 contracts for $600. And I just figure that being the everyday trader with an average to small account, that an average trade investment could be $600. And so that's kind of what we're going to work with here in this trade. And so the stock price goes up to $155, and your premium is now $7 per share when you decide to sell. The transaction happens behind the scenes at the exchange. You paid $3 and you sell for $7, and you keep the $4 per share difference. So you had 200 shares and you realize an $800 gain on your $600 total investment for those 2 contracts. That's 133% gain. Now, this is not an exaggerated example. This is the pricing of options, and trades like this happen all the time. This is the leverage that options give you. So to find equities that are going to have big, consistent moves, we are going to add an average true range indicator to the chart. And an average true range is what it moves per day on average. It doesn't say whether it's moving up or moving down. It's what its average move is. And so we're going to look for stocks that move 1.5% to 2% per day. And again, to find this, you are adding this average true range indicator to a daily chart because you want the daily move. And I suggest, like I said, 1.5% to 2% ATR a day. And so if we look at Northrop Grumman here, it's 1.5% of its price of $190.11 is $2.85. You can see down here that the indicator is saying that it's I don't know, 310 or 320, somewhere in there, so that it more than qualifies then for this being a good candidate. You can create a watch list of equities that have consistent big moves, and it doesn't matter what strategy that you're trading. It can be mine, it can be some other teachers, some other traders, something that you're already doing. By adding and focusing on stocks that have these larger moves, you are going to come out ahead because they move consistently larger amounts rather than just pennies. So this is Alibaba, and the way that I do this very quickly in my head is I would look at the price and say, okay, this stock is $83. So 83 cents is going to be 1%. 2% then is going to be $1.66. And I just, well, like I said, I round up, round down, but I just do that quickly in my head. I look down here at the ATR, and I can see that it is above $2. So that means that it's more like 3%, but it more than qualifies for my 2% move. If you trade weekly options, I have discovered that really a 2.5% to say 4% move is going to work out to be a double in the option premium. So if you focus on stocks that are going to have a 2% move on average a day, you are going to be able to have your trades make a profit very, very quickly by focusing on stocks with a high ATR. So another indicator we're going to add here, and this is going to help us to determine overbought and oversold. And there's not a lot of traders that know of the CCI. This is the Commodity Channel Index, and it can be read quite like maybe you have used Williams percent R. It is similar to that, where it is when it's up above the upper boundary of 100, it is considered to be overbought, and when it's below minus 100, it's considered to be oversold. And we are going to want this overbought and oversold, indicator to happen within a certain length of time. That if I'm trading here, it may not, the fact that it was overbought, I don't even know, 2 months ago, that is not really going to influence what's happening now. You want to have it to happen within a current period, and I have set up kind of a 20-day range that it needs to have been overbought or oversold, depending on which direction I'm trading within that period of time. The next is the percentage price oscillator, or PPO, and we're going to spend a few minutes looking at this indicator as well. That you have the reading of this is like the MACD, which some of you may be more familiar with, that the price will move in the direction of the cross. In this case, we're looking at the red line crossing over the blue line. So if the red is crossing over the blue and heading up, price is going to head up. When the red line crosses down over the blue, price is going to go down. You can see the areas where it is flat, and what happens? Price goes flat. And we're going to put all of these indicators together, and so that they form a strategy or a proven entry time and to be able to get into a trade. The next indicator that we're going to have is what we are calling the Kirkland oscillator, and this gives us what we call a touch zone or buffer zone. On this particular stock, which is Chipotle, the lines are very, very close. In some of the others, as we look at it, you'll see that these lines are a little wider, and it's set up by price. It looks a little different on each chart. But if we were to be getting into a put trade, our entry signal would be when the oscillator line crosses through the lower boundary of the touch zone. And this would be our entry. And you can see that if we look up, this is about where we would enter, and then price continued to drop down. So we're going to have all of these indicators that we have discussed to play out. We want to have the CCI has been recently overbought. We have the PPO have crossed down, and then we have the Kirkland oscillator cross through. This is our entry signal, cross through the lower boundary of the touch zone, and we are trading on a stock that has a ATR that qualifies in the 1.5% to 2% range. So if we put this all together, again, we're looking for the stock to have been recently overbought and to have dropped into the range on the CCI, meaning it's getting ready to move in the other direction. If we were getting into one that was oversold, we would want it to be above the minus 100 so that we know that it's getting ready to move upward. We're going to be waiting for the new trend, whether it's going down or whether it's going up. This would be the buying trend. And then the Kirkland oscillator would be moving up through the top of the upper buffer zone, up through the upper range of it. In this case, we had a possible second entry because they got started, quickly dropped back down, and then started up. But we still had the other inclusive requirements for it to be a trade. We'll look at some of these as they come together. So this is a chart set up from the very beginning. We are going to be looking for a stock that was oversold on the CCI and has moved up above the minus 100, and so this qualifies. We have a new PPO cross, so we know that we're going into a new trend direction. and then we come down here to the Kirkland oscillator, and so far it has not moved up above the top of this upper range of the buffer zone. And of course we wouldn't even be looking at this stock, which is Visa, if it was not qualifying with the ATR. Would be our very first requirement, is the fact that it qualifies as far as the percentage. So what happened next? It stayed in this qualifying area of the being between 100 and minus 100. And the reason for that is if it all of a sudden shot up here to being overbought and we didn't have our entry signal, that would be silly. It would already be in that range where it maybe needs to turn over and have the indicator reset. So you want it to be in this, if you want to call it a neutral area, but the fact that it's starting to move in an upward direction. We still have our PPO cross and a bullish cross upward, and still we have no Kirkland oscillator cross through the upper line of the boundary. So we look a little further here. It's still in the range as far as the CCI. The PPO actually slipped down here. This is why we wait, and then now it has crossed back up again. And so we're waiting for the Kirkland oscillator to cross up. And I'm reading my own note that I put here. From the first point that we would have thought about getting in, this would have kept us from having our money tied up for almost a month, from the first end of August here, first part of September, and now we're entering the first part of October. And so rather than have our money tied up, look at the little candles here all in a row. And it would have kept us out of that trade from having our money tied up, perhaps having time decay in an option and wondering, is it going to move, isn't it? We would not have even gotten in because of the Kirkland oscillator protecting us from that. And so finally now we have the entry. It was right here that we advanced a little bit. And so we have the CCI on the date that we entered on October 5th was still within the range. We had the PPO cross up. It was heading in our upward direction. And finally here we had the Kirkland oscillator move through the upper boundary of the buffer. And so we stayed in the trade and we got out on November 27th. And if we look at the results, as I was saying, that a 2.5% to 4% equity price move often equates to a double in the weekly option premium. If you were to be trading monthly options, an 8 to 10% move equates to a double. And this is why you want stocks that have the high ATRs. So in this Visa trade that we just kind of walked through, let's say we purchase calls after open on October 5th when the Kirkland oscillator crossed through that touch zone, and we purchased them for $2.90 per share or $290 per contract for the January 16.92.50 strike call. And let's say we bought 2 contracts for a total investment of $590. That keeps it kind of in that $600 range. And we sell at the end of the day on November 27th. The call contracts were then worth $7.55, or $755 per contract, and this is a gain of $465 each for the 2 contracts, or $930, and this is a 160% gain. Visa, when we entered the trade, was at 71.06, and when we sold, it was at 79.84. So that's $8.78 change in price. That's a hefty 12% increase in the stock's price over that trading period. But our option increased 160%. That is the leverage of option trading. So for an investment of $590, we controlled $14,000 worth of Visa stock for that period of time. And had we placed the same investment, had we bought 100 shares of Visa stock at 90, whatever it was, 91, Visa's price was 71.06. Had we bought 100 shares at 71.06, it would have been a $7,000 investment that we would have been able to purchase 49 option contracts, and we would have earned $22,000 in that same period of time for that same investment. So this is just a great example of how you can invest with a modest amount of money and end up having really big gains. This is another example, and we'll watch how this sets up, that we're seeing some bullish candles, that we have the CCI had recently been oversold. It has moved up above the minus 100 line. We have a PPO crossed up so that we know that the direction, the trend direction, is going to be changing and moving in our direction. But the Kirkland oscillator has not yet crossed above the upper boundary. And this is for a biotech stock, Allergan. All right, and then here the CCI has moved out of that zone, and so it's not qualifying, and it has dropped out here of the PPO, has crossed down before the Kirkland oscillator crossed up, so there's no trade yet. Price is starting to set up again. We have the CCI has moved back into the buffer zone. The PPO has crossed back up, but still the Kirkland oscillator is keeping us out of this trade. We're going to wait for the confirmed entry. And so we finally get it. We again have all of the elements that we need. It was oversold, moved into this range between the 100s. The PPO has crossed up, and now the Kirkland oscillator has crossed above the upper boundary. We're in this trade for a few weeks, and this is the exit. You can see the full move here, that the CCI continues up, finally gets up here back to the overbought area. The PPO, there's space between the lines as it gains strength in the trend direction, and the Kirkland oscillator headed straight up and then began to roll over. So if we look at the results of that trade, that you would have purchased the calls after the open on October 26th when the oscillator crossed through the touch zone for $17.40 per share, or $1,700 for just one contract for the December 15 275 strike call. And let's say that we just bought one contract. That is a hefty premium for a total investment of $17.40. And we sell at the end of the day on November 4th. The call contracts were worth then $40.30, or $4,000 for the total contract. That's a gain of $2,290, or 132%. That is the example again of the leverage that you get with options, and having all of the elements in the right place and heading in your direction and waiting for that confirmation. Price when we entered the trade was $265. When we sold it was $307. And that's a $42 change in price. That's 16%. That's a big move over that trading period, and yet the option increased 132%. And so for that $1,740 investment, you controlled $26,000 worth of stock. And had you placed that same amount of stock purchase for 100 shares, you would have been able to purchase 13 contracts and would have made $29,000. Now, that is way out of most people's investment pocketbook, but it is an example of the leverage of being able to purchase options for a modest investment and be able to reap big gains. So let's look at a put trade that we're going to be looking at a downward move, and so we're going to want the stock to have been recently overbought within the current period. We're going to want the CCI to drop below the 100 level, and for the PPO to have crossed down, because that is telling us that this is the new trend direction. And we're going to be looking for the Kirkland oscillator to have crossed down below the bottom of the buffer zone. So this is what it looked like. This would have been our entry, and down here would have been our exit. You can see that the PPO stayed to the underside, and the Kirkland oscillator dropped and flattened out, and then dropped some more, and again kind of flattened. So this was Newmont Mining that we just looked at, and you would have purchased puts after the open on June 5th when the Kirkland oscillator crossed through the touch zone for $1.25 a share, or $125 per contract for the September 25 calls. And let's say you bought 5 contracts, staying within that modest investment amount of, say, $625. And at the end of the day, on August 10th, those call contracts were worth $7.95 or $795 for the contract. And that is a gain of $3,350 or 536%. That's just amazing to me, and it happens on a regular basis. This is not an extreme example. So putting again the elements together, and again you can apply some of these new indicators that you may be learning to whatever you're trading at the moment, that you want stocks with consistent big moves, you want them to be overbought or oversold so that they have a good ways to move to recover to those previous levels. You want to make sure that they have put in a bottom or a top and are reversing and beginning a new trend. And then you want the confirmation signal. And this cuts out all those false starts and shakeouts and having your trade hit stops where it instantly moves very quickly in the other direction, and you have to jump out of a trade. So this is the exciting part, that you can use all of those individual indicators to help you, but MetaStock has put everything all together. They have automated it for us. And in this particular example, they're showing the Kirkland oscillator here and how it moves, in this case, say, below the lower buffer zone. You can see that it swings based on what's happening. It goes from bullish to bearish and so on. And it gives these buy signals and sell signals that you are able to trade. Off here on the side are actually some instructions as to whether you're trading a daily chart or a 60-minute chart. The indicators can be applied to any time frame, and they are giving you what the ATR is. They have figured it out for us, and notations as far as what the indicators are telling us, whether they're bullish and bearish, and so on. We'll look at another one of these. And another thing is the fact that the add-on actually you can use it to run a scan. So it's not just that you have to apply these indicators to stocks that you come up with. You can actually run a scan looking for not only the ATR, high ATR stocks, but also stocks that are giving the signal. Again, this is another example. This is a USO, and you see here is a sell signal, and look at that drop that you had. And you can see how it dropped through the lower zone and just stayed down through that whole period. There is a more intricate version, and it's your choice. You kind of flip and say, well, I just want to see the Kirkland oscillator. I just want to see the indicators to get in and out. The rest of it is just all too complicated. And then there's other traders that say, no, I want to be able to kind of follow what's going on, say with the PPO or the CCI, and you can have the other indicators added. But they have automated it all so that it digests the information. It makes sure that it was oversold or overbought within a 20-day period, that the Kirkland PPO has crossed up, that it is within the 100 lines in that zone on the CCI, and it processes this information for us and comes up with the stocks that are giving the buy and the sell signals. This is an example of the one of the scans that it ran, and I'm sure that if you're MetaStock users, you're familiar with this process of it being able to sort out stocks. Jeff, I know you have some more examples of the MetaStock.
I do. Yeah, and we do have a lot of people that are kind of maybe not MetaStock customers yet. So I want to kind of show how the process of the scan works. We do have a couple questions that have come in, and sure. I was wondering if you could speak to them a little bit. I've answered most of them anyway, but one of them was, one of the questions that came in was, does this strategy work on Forex? Have you had any experience with it on Forex?
I do not trade Forex myself, but I have a number of friends who trade Forex, and it does work for that. Truthfully, the indicators and what we have gone through here, whether you use the automated system or whether you are using the CCI and putting that information together, it works on anything that can be charted. It can be futures, it can be Forex, it can be an ETF. It works on anything that you can use a chart to determine direction on.
And then Bill wanted to know if you could use it on a 30-minute chart. And I know the answer to this because of the work we did together on the commentary, but I'll let you answer it.
Yes, truthfully, it works on any time frame, and ideally, it's a wonder. I mean, it's just awesome because there are traders that have full-time jobs, and they can apply this to a daily chart or a weekly chart and get into a longer-term trade. And then there's others that can trade 30-minute and watch the indicators and watch the trade kind of unfold. And there's people that apply it to even smaller time frame charts and day trade, where they're in it for just a short time, a couple hours.
One of the things that I like about the commentary, and I'm going to show this, is the commentary is very specific about, and it's a feature that I'm going to show, but a commentary basically is what Wendy was kind of showing you, that it kind of tells you where to buy and what options to consider and things like that. And it specifically says if you're looking at a 30-minute chart, you should be looking at these expirations, whereas if you're looking at a daily chart, you should be looking at these expirations. And so one of the things that I absolutely like about the way we've integrated the product is the information that it gives to you. Frank asked a question about scanning for ATR percentages. I'm going to show that. Bill, yes, shorter than 30-minute charts does work for that as well. And then it seems like a lot of the questions are coming in regard to scanning. So let me kind of go in. I'm going to kind of show you how the scanning works, how the ATR values work, Frank, for the scanning, how you see those, how you can rank them, and that kind of stuff. So let me just kind of, let me start my little part, and then we'll answer any other questions that come in as we go. So in any case, the thing that I really like about Wendy's, Trey said it a little bit earlier, and I think Trey bought it after we showed it at the summit. But Trey's a good friend of MetaStock. He's been with us for a long time, and he comes to a lot of our webinars. But one of the things I like is it's a very simple system. But the way that it's designed, it uses ATR to help you find the stocks with the profit potential. And then in addition, it looks for stocks using CCI that are at a turning point. And then it then notifies you when that new trend has begun, and then it protects you with the whipsaws using a Kirkland PPO. So it's a very solid, well-rounded process to not find just the trends, but the new trends that really have a lot of profit potential. And I kind of want to give you an idea of how that all works in MetaStock. So let me flip over to my MetaStock charts and show you how that works. Give you a little bit of a rundown or an idea of how easy this process actually is. For those of you that are new to MetaStock, a couple things I want to mention about MetaStock. It's been rated #1 now 23 years in a row, and that's by the readers of Stocks and Commodities magazine. It's a very good toolbox for those people that are serious about their trading, and people buy it because it's great at back testing. It's got a patent-pending forecaster module that's built into it. And some of the things that I love particularly pertain to the Wendy Kirkland model, which Wendy Kirkland would be what we consider an add-on to MetaStock, where we can go in and say, okay, well, this is what we're looking for. We're looking for the ATRs to be high. We're looking for the CCI and the Kirkland oscillator and the Kirkland zones. Give us a list of the stocks that actually meet that criteria, or the ETFs, or the Forex, or whatever instruments you're interested in. We get all of our data from Reuters, so we literally, if you look at this number right here, this 373,225, those are the amount of issues you could technically scan against if you wanted to. And so if you're interested in trading something in England, or Asia, or Egypt, or wherever it might be, we're going to have that data for you, and it's going to be available for you. So in this particular case, just to kind of get back to what we're talking about, if we wanted to run the Wendy Kirkland automatic swing trader scan, literally you're going to come into what we call the Power Console. The Power Console opens up for you as soon as you start MetaStock. You're just going to click on this scan button, and you're just going to select the Wendy Kirkland automatic swing trader. Okay, and then what you're going to do is down here underneath you're going to see a list of different instruments that are available. And I already ran this scan. What I ran it against was I ran it against all of the optionable stocks. So you literally put a check mark there, click on Start Exploration, it's going to run for you. We do have other lists. If you're looking at ETFs, you have that available. That's something you could scan. If you're interested in Canadian, again, if you're interested in Europe, there's a ton of different information that's available for you, and if you're interested in a market, chances are we have that market available for you. The scan itself took maybe a couple minutes to run. I don't want to waste a couple minutes because we're running out of hour. So what I'm going to do is I'm just going to show you how the report looks like. So I'm going to go ahead and open up that report.
Can you hear me?
I can hear you, Wendy. Just so you know. Actually, and what we've got here is we've got a couple columns. We've got the long column. So out of the 3,000 something optionable stocks, there is what, 7 or 8? 1, 2, 3, 4, 5, 6, 7, 8. 8 that came back today. So that's 3,000 something stocks I don't have to look at. I'm just concerned about the ones that have an opportunity. Again, it's about saving time. So right here we've got listed, if it has a 1 in this column, it's going to be a long trade for tomorrow. Ran a daily scan, by the way. If it's got a 1 in this column, it's going to be a short trade for tomorrow. And Wendy did say she likes to find stuff that has an ATR value of at least 2.5, right? So what we do here is we actually list the ATR values for you. And you can sort them based on the ATR values. So out of the 8 stocks that actually had a setup, the ones that would have her criteria that met today, and the average true range, which really kind of gives you the best moving stocks, are going to be Ecolab, Puma, McKesson, and Bioman. So now we really only have to look at 4. The reason, though, we did include ATR as something that you could view, because if you want to push this onto ETFs, I'm a big ETF trader, your ATRs aren't going to be this big as they are on stocks. So we do have kind of the ability for you to use this on other instruments that maybe not have the ATR range that stocks do, but still be able to kind of measure them based on what the ATR is. So this is just giving you that value. Okay. Since there's only 4 of them, I could save this list. I could go in and open up the charts. But since there's 4 of them, really what I'm going to do is I'm just going to highlight all of these, 4 of these ones that came up today. And I'll click on the Open Chart button, and that'll open up all the charts. I think I already did that, though. So let me see. Oh, let me get MetaStock here. And here's the 4 charts. So I just clicked on Open Chart. It opened them all up with the template. And I can kind of see what those opportunities are. This is the full view that Wendy was talking about. So it shows you the average true range. It shows you all the oscillators. It shows you the CCI. It shows you everything that kind of feeds into that. You can go back and kind of say, okay, well, this is actually just kind of looking at just the scan results today. This one was my favorite, the second one, because the signals that have happened in the past have actually been really, really good. And especially the recent signals. I mean, you got a short signal right here on the 7th. Gapped really hard down, get another sell opportunity, and now we're getting a third sell opportunity. So that's kind of how that works. What I also like about this is the commentary that's available, because remember I told you what we want to do is we want to be able to tell you what to do with this, kind of give you some advice if you would. It's probably going to be the first time you've taken a signal based on this system, so what options should I be looking at? How should I be looking to trade that? And so to look at the commentary, I'm just going to make this a McKesson Corporation chart a little bit bigger. And I'm going to go into here and I'm going to click on View, and I'm going to go to the Expert Commentary. I'm just going to go ahead and load up. You get, I love Wendy's little logo here, the WK, just kind of a nice little touch, not really too much, but I think it's a really cool signature logo. When I apply this to a chart, you'll notice there's a little arrow that shows up above the chart. So I could come back and say, well, what would it say on this sell day? Or what did it say on this sell day? And it'll kind of tell you what it's doing on that particular bar. I'm going to leave it that on this particular sell day because this is the one that we're looking at. And it just gives you a lot of information. So Automatic Swing Trader is currently signaling a short sell opportunity. The signal is taken into account the CCI parameters, the overbought condition, the PPO cross, signaling a new bearish trend direction for the Kirkland oscillator. If you're interested in taking advantage of this opportunity, you could do a few things. You could short sell the stock. If you're an option trader, you could consider an intermediate term put option 2 to 3 months out. When this signal is based on a daily chart. This kind of goes back to the question we were answering earlier. What time frames do you use? Well, if you're looking at this on a daily basis, you're going to be looking at 2 to 3 month expirations. If you're looking, so you'll be looking 2 months out. If you're looking at an hourly chart, you'd be looking 2 to 3 weeks out. If you're on a 30-minute chart, you'd be looking 1 to 2 weeks out. So this gets really specific about what you're looking for. Not only that, if we read a little bit further on, it's going to say option traders will typically look at put options that are out of the money or one out of the money, and we want a delta of 40. If you're conservative, you could consider a put option with more intrinsic value that are 1 to 2 strikes in the money with a delta of 60. So it's really giving you some good ideas in terms of, okay, we have a signal, it's a valid signal, and this is stuff that Wendy's actually put together. She did a great job with it to tell you exactly how to take advantage of that trade. I just love it. So once you're short, that's not all though. You should look to place a stop loss order at the previous candle high, so we'd look to put a stop loss order in right here. Okay, want to protect us in case we're not right. We're not right all the time. We want to have stop losses in place. Once in an established trade, traders should then exit the position 2 weeks before the option's expiration date, usually close by the first Friday of the expiration month, unless the position is very deep in the money where time decay is no longer an issue. Once a trade is open, here's where your stop should go. Okay. Also gives you some more exit advice. I'm getting tired of reading it, but the point I want to get to is it's very thorough in telling you, well, here's the trade, here's the options you should look at, here's your out strategies in case we're not right this time, and here's how long you're going to trade in, here's how you can look to get out of it. So, very, very cool. Uses MetaStock very well. I'm a big fan of these commentary features, especially when they're well put together. Wendy did such a good job in kind of understanding what we were trying to get at and delivering something we could use. I really appreciate all the work she put into us with this. James asked a question. There's been a lot of questions coming in. I'm going to try and get, how do I get out of the trade? So we could consider taking profit and exiting if the Kirkland oscillator reaches an extreme level and then flattens out or it begins to turn up. Okay, that's one way we could get out. Or if the CCI turns positive, or if we're just getting to the point where time decay is going to be a factor. It tells you that. It tells you exactly how you should trade that and get out of it. The scan that we did, Harshad, is daily scan. So I ran the scan on a daily interval, but you can run 15 and 30 and 60-minute scans as well. It's very, very easy to set. You're welcome, Jamie. Let's see. What is the data feed for the data service? It's actually pretty cheap for, especially for like our hourly updating service. It starts at about $59 a month, and that's part of the PowerPoint slide. So let me kind of go back in here. What's included with the package is you've got your all of the indicators that are necessary to run it. You've got the expert advisor that outlines that commentary, and it kind of gives you the buy and sell signals and the highlights and the chart and all that kind of stuff. You've got the exploration, and then you've got the two templates. The one we were working with is the full template because and I like to look at the full. I like to see what the indicators are actually doing. There's also a cleaner version of that just shows the signals, and I think the Kirkland oscillator that you can use if you prefer that. I just generally like to see everything personally, so I prefer the full view. Okay. The cost for the Kirkland add-on, the Kirkland Automatic Swing Trader add-on is normally it's a one-time cost. It's only $500. You can get that for $399 as part of a special for this webinar. That will include access if you don't have MetaStock. I know there's some questions about pricing for MetaStock. It includes 30 days access to MetaStock. That's either our DC version or our real-time version. It includes a bonus training package where we kind of go through and talk to you about how to use MetaStock, like how to do the forecasting and the charting and the back testing and the expert advisor. And it includes like a money-back guarantee. So if it's helpful for you and it helps you make good trades and it helps you look at 4 stocks instead of 4,000 stocks, well then you're obviously going to want to keep it. But your risk, as a trader, it's all about risk. Your risk is very, very low. It's just your time, which is valuable. But your money is not at risk. It's such a low cost. It's $399. To answer the question about pricing for data, our hourly update service is $59 a month. That'll include basically all of the MetaStock platform. It'll include all of your data for North and South America if that's the region that you want. It'll include your futures data, your Forex data. If you're in a different part of the world, what you can do is you can elect to get a different region. There's 3 regions available. It's North and South America, Europe, Middle East, and Africa, and Asia Pacific. Those are the regions that are available. And so when you're setting up for that, you just basically say what you want. If you want the full real-time version of MetaStock, it comes with everything. We even have a Thomson Reuters product that we've white-labeled that is really good at giving you news and information, and the cost on that starts at $199 a month. Okay. When you go up to this page, I'll just show you kind of how the checkout process works. You just go to metastock.com. www.tradewinds.com/tradewinds.wk. It's going to come up with this page. There's a little bit of a video that I created right after we got the product ready that just kind of talks about what we've been talking about right here, and that's how the scanning works, how the expert advisor works, how everything kind of fits together. If you scroll down here, basically you just come down to this and you say, okay, I want to get Wendy Kirkland's automatic swing trader. It's $3.99 here. One-time cost again. You pay for it. You own it forever. And then if you need a MetaStock subscription, this is optional. If you already have MetaStock and you just want to check out, you just click on Order Now. If you want to start with a subscription to MetaStock, go MetaStock Daily Charts for $59 a month, or MetaStock Real-Time subscription with MetaStock Zenith. Since it's free, and you do get the MetaStock Zenith product as part of the real-time package, you can always go, okay, well, I'm going to try the real-time so I can try it with the Zenith package, which is incredible. And then you can always go back to the daily, what we call the daily charts version. We call it daily charts, but it updates every hour during the market hour. So you can actually do real-time scans, but or you can actually do intraday scans, but it's limited to a daily basis. So select the option that you want to trial here. Go ahead and click on Order Now, and pretty much get you through the process there. We have more questions, a lot of questions, so I'm going to come back and answer some of those. You can order online, metastock.com/tradewindswk. So TradeWinds, Wendy Kirkland, basically. Or you can, if you have questions, and I don't get to it today because there's a lot of them, feel free to give us a call. The number is 800-882-3040. You're going to love it. Give it a try. There's a reason MetaStock's been rated number 1 20-plus years in a row by Stocks and Commodities magazine. And you're going to love Kirkland if you've already used MetaStock. Harshad asked a question, can you take a short-term trade on a, I'm going to come back to some questions here. Can you take a short-term trade on a daily scan? Well, generally the recommendations, and I would recommend you stay with the recommendations in the commentary, but if you're doing a daily scan, what you're going to be looking at is you're going to be looking at 2 to 3 months out, because that's how long the signal can stay in that trend. And as long as you're making money, I'm happy to stay in the trade that long. If you want to go shorter than that, what you'll want to do is actually go with real-time and do an intraday scan. That way you can take advantage of some of the smaller trends. If you already have the data service, thank you, Maddie. I really appreciate your using MetaStock. Really appreciate the question. If you're already using MetaStock, all you have to do is on that order page. It doesn't want to come to the front. You come to the front. Okay. On this order page right here, you're just going to click on just the Wendy Kirkland module, and just click on Order Now, and that's all you have to do. You don't have to set up for a trial. It's an optional thing. If you don't have MetaStock already, well, you'll definitely want to check one of these 2 boxes, because it's an add-on to MetaStock. It'd be like buying gas, but you don't have a vehicle to put it on, kind of thing. You definitely, if you don't have MetaStock already, do a trial. Rick asked a question, are Wendy slides available? Yeah, drop me an email. I'm going to go ahead and send my email out to everybody. If you have questions, let me know, too. I'm happy to answer them. At MetaStock. I'm going to type it in here. It's just my first name and my last name, Jeffrey.Gibby at metastock.com. There you go. And that should have come through to the chat for everybody. So, Teresa asked a question, why is this called automated? Well, it basically takes all of her systems and her whole strategy, and it automates it. It finds all the stocks it meets for you and tells you exactly what to do with them. It's not completely automated in the fact that it actually places a trade for you, but it's pretty dang close. So, Jamie says, I already bought the package. Well, thank you, Jamie. I don't have the training video. Drop me an email. I'll make sure you get it. A lot of questions about the recording. We are recording the event tonight. My marketing guy has also our video guy, by the way, is actually recording it. He's going to have it live and online by tomorrow morning, and we will send a message to everybody with the information. Maddie asked a question. I think I have South America and North America. How do I verify if I have access to the futures data? Drop me an email or drop an email to sales@metastock.com. I'm just going to basically type that one in here too. And they can tell you exactly what you've got. So just that's the other message that's available for you. Maddie says, do all the indicators come with the program? Yes. On this page, if you order the Kirkland Automatic Swing Trader, you'll have everything we showed you today. Scott says, great product, thanks. Actually, Scott's my friend on Facebook, but great product. Thanks, Wendy and Jeff. Thank you, Scott. Appreciate that. There is a manual. There is. There's also a bit of a recorded video that walks you through the process as well. You're welcome, Maddie. Thanks for coming, Trey. Looks like everything else is just. Thanks for another great webinar. Thanks for coming, Trey. Really appreciate it. That's it for tonight. I really appreciate you guys coming in here. Again, just to kind of recap, I just love the fact that I love this product. I think it's so well-rounded. It helps you find those stocks that have the best moves. Helps you find the stocks that are kind of starting in that trend and have confirmed that they're in their trade. It's just such a well-rounded system, and the way that Wendy helped us integrate it into MetaStock, it really gives you everything you need. It tells you, okay, out of the 3,000 stocks, today here's the 8 that actually match. That's huge in and of itself. In addition to that, it's going to be telling you how to get into the trade, what options you should be looking at, where your stop loss is, and where you should get out of that trade. So it's very, very complete in terms of helping you really have a well-rounded mechanical methodology into trading. Thanks, Irina. I really appreciate it. I'm glad you enjoyed the presentation. All right, so that's it for me tonight. I'm going to go home, play with the kids. I really appreciate you guys coming in. If you have any needs, feel free to email me, reach out to us, and we'll see you at the next one.